In today's video, we're going to take a look at the four major index markets: SPY, DIA, QQQ, and IWM. We're going to look at all four of these markets with two different indicators. The first is not really an indicator, it's a drawing tool, and that's Fibonacci. I'll walk through all of the different Fibonacci levels I have to get an idea of which market is extended, which market still has targets to the upside, and if so, what are those targets? After that, we'll take a look at which markets are giving us overbought, oversold confirmations with the edge signals indicator. If we bring together both Fibonacci and the edge signals, I think we'll have a fairly good idea of where price is in relation to its roadmap. If you're new to Fibonacci, be sure to check out our free Fibonacci trading course. I just updated it for 2025. There's 4 modules. In each of the modules, you'll learn something new. It's really modules 2 and modules 3 where you also get your hands dirty with charts, understanding how to draw the same levels that I'll be taking you through. Now let's start with the S&P 500. And I'm going to use the same tools that we talk about inside of the course. The two tools, the Fibonacci retracements and the Fibonacci extensions tool. Now I've already drawn out some of these levels. So inside of the S&P 500, for example, if you use the 2022 swing high to swing low, we've already exceeded the 200% level. That's what I want you to take away from the 2022 level for the S&P. If you come into DIA, inside of DIA, that same swing high to swing low, where in the S&P we had far exceeded it, we're just starting to cross that level inside of the Dow. Now note, as we're crossing this level, we're doing that on the back of 1, 2, 3, 4, and 5 different bearish edge signal arrows. So to me, between the S&P and the S&P still feels like it has a little bit more room to the upside, whereas the Dow feels a little bit weaker. Next up, we have the Qs. Inside of the Qs, if we start with the 2022 swing high to swing low, we're just crossing that 200% level as well. We've exceeded it a little bit more compared to the Dow. I've also taken our 2025 swing high to swing low, and that gives us a 1272 of 578.46. So somewhere here, I think you might see the Nasdaq chop. In terms of upside levels, 626.35 is the next upside level. Inside of the S&P 500, we have the upside level much closer at 648.98. Finally, we look at IWM. IWM, unlike the other 3 index markets, across that same period just feels like chop. You can almost draw a line sideways. I've also drawn some support levels here, which we've already tagged into, bounced from. So now it's just the upside targets that we can really use. To get those targets, you almost have to zoom out to a 20-year chart so that we get the swing high, swing low from the COVID period. That's this swing high to this swing low. This is still active inside of the Russell. We've crossed the golden ratio of 1618, and now the one level that's still open inside of the Russell is that 200%, which we've already tagged inside of the other 3 index markets. This level inside of the Russell is at 251.09, and I think that's the upside level inside of the Russell that I'd be looking at. So to me, the Russell has the most upside. If you were to take a look at the other markets, SPY, we had more room to the upside. QQQ, we had more room to the upside with extensions above us. DIA was the one market which looked a little bit less in terms of that extension. And if we do draw the same retracement, our next upside level is 474.73 along with 504.22. If you're curious again to learn how to draw each of these levels, both the red and the green lines, it's modules 2 and module 3 in the Fibonacci trading course that you'll find most useful. And then you bring it together with understanding how to find clusters which are forming most of these levels that I'm telling you. I hope you found this video helpful. Be sure to check out the course if you haven't already. It's updated for 2025, completely free, and helps understand what is the roadmap that whichever market you're looking at is following, and what are the next targets along with support levels to pay attention to. Take care, and I'll see you in our next update.